Hello, everyone. Thank you, Coralie, for the warm introduction. Unfortunately, I don't speak any French. I'm very happy to be here today, especially because if you think about 5 years ago, 10 years ago, that's not a long time ago, probably this panel would not have been possible. So we have traditional banks here talking about the intersection of TradFi and blockchain technology and how they're actively using it today. So it's pretty remarkable. So let me briefly introduce our panelists. We have Ricardo Martins, Chief Crypto Officer at Bison Bank, based in Portugal. Bison Bank has recently launched Bison Digital Assets. That's a virtual assets platform for individuals and institutions. He's going to talk about it today. We have Nicolas Marxer, Head of Blockchain Banking at Bank Frick. Bank Frick specializes in banking for financial institutions. They're based in Liechtenstein, and they began offering the trading and custody of crypto in the regulated bank environment in 2018 already. And last but not least, we have Nestor Palau, Head of DLT and Corporate Clients at Signum Bank. So Signum is a global digital asset banking group focusing on digital assets clients. They're based in Switzerland. So welcome, everyone. I would like to start maybe with you, Ricardo, since you come from a traditional background, traditional bank. And can you talk about, how do you see this intersection of TradFi and blockchain, and what are some of the trends that you're seeing, especially in the last few years?
Yeah, so thank you for the invite and the pleasure to be here with you all. Definitely at Bison Bank, as a bank for high net worth individuals and institutions, we definitely have early on recognized this industry and understood the demand that is for these digital assets. As also a particular bank that has a very wide crowd in terms of an international presence, we definitely feel that stablecoins are already a standard, so everyone recognizes the importance of stablecoins. Everybody does their wealth management also in stablecoins. So we definitely see a rise in the requests for deposits in stablecoins, and also on the other way around, on minting stablecoins for their normal procedures in their life and for corporates in their business. So we definitely see a trend, seeing corporate clients that need access to banking services, but they already manage their treasuries or a good part of their treasuries also in stablecoins. And I think that the banks are part of this equation of bringing this to a new standard, to a new stage where we can have mass adoption and have no preconception about the space.
Thank you. And what about you, Nicolas? Because you also come from a traditional banking environment. What is happening in your world?
It's very similar to what Ricardo just said. We see more and more demand, especially on the, let's say, on the real world use cases like stablecoins. And given the current landscape in banking, I think everybody who has a US dollar account is struggling with the same problems. And I think stablecoins is a pretty good solution to solve that. And people recognize that and trying to either build their own stablecoins or want to use it. And there are many different, like we know the US dollar stablecoins, we see more and more demand in other currencies as well. And I think that's the biggest trend, what we're seeing at the moment.
Thank you. And you, Nestor, for you, it's a bit different because you've been focusing for a long time on digital asset companies. So how is that different for you? Are you noticing different trends?
I mean, we have noticed that the first use case of digital assets or blockchain was always the speculation or the trading use case. But following up on what my colleagues just were outlining, today when we came in, we were the three of us looking at this beautiful bolt outside, and we ask each other, does any of you on your respective banks have one of these? And both of us said no. And then I was asking myself, how much cash I carry. I probably carry 10 Swiss francs and 5 euros. And this is a realization that at the end of the day, money is much more digital than the brick and mortar that we recognize. And thinking about that, this at the same time, the protocol that runs fiat nowadays has not been upgraded probably for the last 30, 40 years. And probably a stable coins with Circle being one of the largest players on this has now the opportunity to really run this and upgrade that underlying financial system that on which we operate. And that's one of the things that we are seeing. Probably our volume of payments and the volume of a stable coin minting that we see is quite similar. And that is really a consequence of how people move money nowadays. It's much less of that brick and mortar, but much more digital.
That's great to hear, because you all mentioned stable coins without me asking for it. But I would love to dig deeper a bit into that. So what type of clients are using stable coins today, and for what use cases? And are you seeing any specific differences in specific countries or regions as well?
I see the examples are very broad, sort of seek. I also want to say that a trend that I think that we all see is regarding tokenization in general. It's kind of the topic in digital assets as well. But stablecoins are the example, the most prime example of a well-established tokenization, right? And I was thinking now here that within Bison Bank and Bison Digital Assets, the mission is to see digital assets as other assets in the ecosystem. So being cash equivalent, and cash equivalent is what stablecoins already are. In terms of the types of clients that we see a variety of things. I think right now we are in some explorative conversations, for instance, for tokenization, and the subject comes out to say, for a specific product, for a specific structured product, will the payout be in fiat or be in stablecoins? That's already on the table, right? And so we see corporates that have, more or less on a daily need, the need to mint USDC, to pay for their suppliers or to settle their positions with another party of their own. And so our mission in that sense is to be a vehicle for allowing these corporates to be able to have banking service together blended with digital asset services.
Yes, I fully agree with what you're saying. There's, in my opinion, at least what we are seeing two different type of corporates and clients trying to use the stablecoins. One group of them is the ones saying the traditional financial system is just too slow, too expensive. They want to speed up transactions. They want to do cross-border transactions much faster as they are used to be. And the second one is definitely where we see the bigger demands coming from, especially from emerging markets, which are not having the same access to the financial system as somebody from Europe maybe, which is also a tricky situation because as a fully regulated bank in Central Europe, you cannot serve all these companies which are coming with great ideas, and the only thing they're missing is a solution to do transactions easily. And so sometimes it just simply cannot help. But I think for cross-border payments, that's the biggest need, and also like for speed and cost of transaction.
Yeah, at Signum we serve actually quite a widespread set of clients, from qualified investors that want to enter this industry and they want a safe way to have this gateway, being a fully regulated Swiss bank, to institutional investors such as family offices, pension funds that want to have that way into the industry in a fully regulated manner, but also to corporates in my specific case, as to some of the largest crypto foundations, crypto startups that are building the native technology of this industry. Main use cases that we see are indeed the financial use case. So when basically they utilize stable coins, but also digital assets for the management of the treasury, for the payments to their teams, and indeed see more and more pressure towards what Ricardo was mentioning, those on-chain wealth asset management solutions that continue appearing. In crypto, we say always these DeFi Legos, so that basically the beauty of these open blockchains is that allows us to build on top of services on top of others, and that demand we are seeing more and more. And I think the first movers there will also benefit a lot. Yeah.
Also, maybe just to continue on that. So one of the interesting also sort of say patterns that we also observe is that by being a very internationally exposed bank, we often have clients from regions that are either unstable, either politically, either due to wars, or that have difficulty in accessing banking services. And just by the simple fact that as a wealth management bank, the fact that you can deposit your stablecoin and have it as part of your wealth management package is something really, really interesting for them. Because again, many of them are already used to leverage their position and deleverage their position, and they are already doing some wealth management by their own, and we feel that it's frequently that they already have a substantial position in stables, and so they are already also and by this time part in wealth preservation as well, regardless of the market ahead.
I'm curious about, so Nestor, while you were speaking, I was thinking you're dealing more with Web3 companies already accustomed to using digital asset services, while for Bison Bank, you're talking about either wealthy individuals or corporations that are more traditional, right? And the same case is for Bank Frick. So how does it work in your case? Are you having to do a lot of education? So a lot of push, or do you see these companies and individuals coming more to you in the last few years?
I think we're in a great position as one of just a handful banks around the globe, which are offering these kind of services to companies in the crypto and the blockchain environment. And at the moment, we're still seeing quite a lot of companies, and I think for my two colleagues here as well, coming to us and asking for the services they look for. But I think in the future, banks have to change. They have to start offering services to serve these companies, because I think in one of the speeches before we heard it, we see more and more the move from the traditional world into the blockchain world without even seeing or recognizing that you're using it. So banks need to be prepared to be able to first of all custody these assets, to send transactions, and who knows if we have in 2 years' time next to the euro and US dollar account just a simple stablecoin wallet, which is working the same way as we do transactions nowadays. So I think at the moment people are still coming to the banks, but at one point banks need to start be more active again to gather their clients and do more education again to convince them as well we are the right partner for you then.
Yeah, I just want to say I think it's a very interesting question, because definitely I think the fact that we three are here, it means that definitely we are in a change environment, in a tipping point in my perspective. But definitely, for instance, for Nestor, you come more from a bank that was born to be a crypto bank, sort of say. Our journey is a little bit different. But we definitely have already, so in our core, in our case, it's on a private/wealth management bank that also has corporate accounts. But because we felt the need in the market of a lot of startups in the space that couldn't have a bank account open, no one could understand their business model. Yes, the education is a vital part in this. So it's a constant work. It's not something that you learn or change in an institution in 1 year time or 2 years time. This is ongoing work, and this is why we continuously invest in education, and on a day-to-day basis, it's a constant work to educate all the areas in the bank, compliance, risk, etc., to understand that it's just a new business model. Does not mean that it's something wrong with that business model. It's just part of what we all know in the digital asset space. And so we have been doing a little bit of a shift towards more retail-ish bank, but will never be a retail-ish bank, but we have offered some facilities that are more looks and feels more like retail to better support the ecosystem on our side.
Yeah, I'm gonna say that, funny enough, before being a banker, although I hate that word, I was also a founder back in 2015, 2016 for one of the first companies in the industry in Europe. And then we really struggled to get a bank account with a bank to be able to hire our employees. And I promised myself I would never work for a bank, actually. And I ended up doing it years after, and that was with the only goal of becoming the largest crypto bank in the industry. And a bit of the emergence of Signum was as a consequence of these. You know, in that 2017, 2018, when our founders started the idea of Signum, there were no specialized players to bank all these companies, and there was a continuous push and energy towards building technology in this industry while not being able to hire top talent from other industries simply because not being able to access banking rails. And now, you know, fast forward till today, we live to be the largest crypto bank in the industry by number of projects, by market cap, etc. And we see our role now more as a facilitator for all those banks that first said no to this industry, and now, by demand or by really being convinced about the benefits that this brings, enabling them to access crypto without being a specialist. And that's what we do now with more than 20 banks, actually. Yeah.
Great, thank you.
Maybe to add something, sure. I think in terms of education, I think that's one of the major roles we have nowadays, to educate other banks, because I don't know how many thousand banks are out there and how many thousand companies are unbanked right now, and more to follow. So I think it's our duty to educate the other banks and show them this is one part of the future. I don't want to say that's only the future, because maybe there are even more things coming to it. But I think it's really important that they wake up and start to work on these topics, that we are not losing time in for the mass adoption and for the economy to grow on this in the blockchain industry.
You touched an interesting topic, which is the unbanked, right? So we all know that in the world we have almost 2 billion people that are either unbanked or underbanked, and today or tomorrow or in a few years they will be able to just have internet and a device and digital money, right? So imagine a future where every individual will be able to own their wallet, own their money. Why will we need banks in the future, and what is going to be the role of banks in that future?
I would love to answer that with my standard answer I always have since many years. As I started dealing with crypto and in a bank in 2017 already, back then it was always we don't need banks, how can you work in a bank, there will be no banks anymore. That's absolutely wrong, because nowadays, as Nestor mentioned, you still have cash. I don't, sorry. You can hide the cash back home, you can pay somebody in person, but you're using your bank account to do it digital. Same with stablecoins, for example. You can do a transaction by yourself, or in the future you can use banks to do these transactions. So I think there's a lot of good reasons for banks to stay, especially that a lot of people don't want to be responsible for storing their own money. They want to pass on the responsibility to somebody else who has the experience with it and don't be responsible by themselves. And I think it just needs to be a change in mindset and change in assets banks offer, and then the banks will survive. Not all of them, because some of them will not make that move, but I hope we did it already, so hopefully more to follow.
I would say on that the role both can coexist actually, so people can be their own bank with a MetaMask wallet and self-custodize their assets, as that's also something that Circle is enabling. But at the end of the day, it will be delusional to also think that there is no need for fiat at the end of the day. And I can tell you that many of those come to that realization when they want to purchase a house or purchase a car, and we see that day to day, that those big minds developing the technology also need of that interaction. And I would say that in my view, the role of banks is more as the gatekeeper at the end of the, let's say, the funnel. So a lot happens through those light players as Circle, as all that on-chain platforms that allow you to manage your wealth in digital assets. But at the end of the day, when you want to access certain sets of services, you still need of that gatekeeper, such as a bank. Yeah.
I would say there is a funny story on my way to the hotel yesterday, very late night. I jumped into a taxi a little bit tired, and I thought, everybody accepts card payments. What could go wrong? And when I arrived, the guy was visibly upset when I asked for payment with the card, because he said, Atombe, the cash machine has dropped and it was broken. He showed me, and I had to go to an ATM to withdraw money, and I haven't done that for a while. But I would like to say that, just as a segue, I would like to think that within, let's say, 3 years, with MiCA in place, that an average taxi driver would know about stablecoins and that you could pay with stablecoins. But with regards to that, where banks fit in, I think this is, as everything in history shown us that until banks join any space, there was no real mass adoption, right? I think that it's unreasonable or too much of an optimistic, and I'm an optimistic to think that everybody will have self-hosted wallets. That's one. Two is that there is also risks with self-hosted wallets. Maybe it will evolve into having some shared keys through MPCs or even better technology in the future, and banks can and should play a role on that to provide confidence, to provide convenience in many cases. We can all do self-custody of cash, right, in your pocket, in your safe at home, right? We choose not to do because we choose to trust banks, at least until our own thresholds. And I think that banks are here for that. They are also here to absorb all the burden of regulation, right? So there is no type of entity around that will understand better MiCA than the banks. That's just a matter of fact. It's very similar to the MiFID rules. And so banks are here to absorb and also to bring together to the market the confidence and the depth that we need to go to mass market. Otherwise, I think organically things, the younger generations will see this as much more natural, but there is still a lot of years to go until we see that. I mean, in Portugal, for instance, you still buy a house, for instance, with a check, right? That's a use case that we see. People sell their digital assets. They have euro, and then they ask me to issue a check. Can you issue a check? Yes, we can issue a check, and you still do the transaction with a check. So there is always this stage to transition to one side to the other, and I think that there is a lot to do on the next years around that still.
Thank you all. I know we're coming towards an end. Maybe, in 1 or 2 minutes, do you have any closing remarks on how do you see the future, the intersection of TradFi and blockchain? And I would be interested in hearing what do you think MiCA will do for Europe as well, since you mentioned it.
Yeah, I think that Mika, I see Mika with a lot of optimism. I think that Mika, even on the narrative side, I was speaking to some people before. I think just on the narrative side, thinking that within a year, less than a year, you'll no longer be able to say that there is no regulation for this space. I think that's completely erased from the question. I think Mika will be something that is not like anything alike in the world at this scale. Let's put it like that. So it contrasts a lot of what we are seeing in other regions. It provides a clear definition of what is a stablecoin, what is an asset reference token, what is crypto, what should be seen under MiFID laws. I think that will bring a lot of adoption into the space, and I think in terms of trends, I have already mentioned the tokenization part. I think wallet abstraction is definitely something that we already see some experience, again, more in the retail side, but I think that's something that's picking up already. We see some interesting startups and business models in place. And again, why not the banks also offering some bridge there on that front? I don't know.
I agree 100% with you, and I think from a point of view from a bank, Mika is something good. I think for a lot of companies as well, and the ones who don't like it, they will anyway disappear. And I think now it's about time, which enables let's say the next step for the growing here. And I think with trends, I think it changes so fast. It's almost impossible to keep up with what is happening. So I'm really excited to see what comes next. So I'll just take it when it comes.
It's interesting that there is predictions and there are no price predictions, but I'll skip that. No, I would say that over time, what I would expect is more and more overlap between not banks and non-banks, but more overlap between regulated and unregulated counterparties, especially with the introduction of MiCA as outlined, that the rule book for the industry becomes more and more clear. I think that will help a lot of businesses to also gain adoption, as the case of the stable coins first, but also many of us to feel safer when dealing with digital assets, and that also will bring a lot of adoption to the space. So yeah, we go in the right direction.
Thank you. And with that, we are perfectly on time, because I see some colleagues already signaling me that we need to close it. So thank you so much. It's been an honor to have you on the panel, and thank you for your contributions.
Thank you.